The world is changing. Inspiration is everywhere. It has never been so easy to connect, share, and bring people together. We're learning from others and finding the best in ourselves. Challenging our beliefs. Sharing our vulnerability. Overcoming our fears. Transforming ourselves so we can transform the world. How far can we go?
This is London Real. I am Brian Rose. My guest today is... This is London Real. I am Brian Rose. My guest today is Max Kaiser, the American journalist, broadcaster, and filmmaker. For over 10 years, you have hosted the Kaiser Report with your wife, Stacy, on the television network RT, where you discuss finance, current affairs, and cryptocurrency with guests like Alec Baldwin, Russell Brand, and of course, me. You also host the weekly economics program Double Down on Radio Sputnik, have written for the Huffington Post, and are regularly interviewed for your insight on finance and cryptocurrency. You continue to broadcast throughout the global lockdown, discussing the impact of COVID-19, the opportunity in crypto, and the damaging propaganda coming from the mainstream media. Max, welcome back to London Real.
Oh, Brian, I can't tell you, this is fantastic. You know, we had so much fun when we were both up in Shoreditch on the old street roundabout, storming London, doing our independent media, and great time. Great to be back.
Yeah, I mean, you and Stacy were really kind of a precursor to some of the things that I'm experiencing. I remember you saying, Brian, I can't mention this on like your podcast because of Ofcom on Kaiser Report on the RT. And I remember giving you a perplexed look because it didn't make sense to me. And I just assumed free speech laws were the same in the UK as they were in America, but they're not, right? And is that one of the reasons you guys left here?
Well, it's not, it's a lot of reasons. We've lived in different cities over the years, and it wasn't a reason to stay in the UK. We did a lot of reporting on fracking and on British fracking. And this was very interesting because the regulator really was contacting us on behalf of the frackers, on behalf of the UK energy industry. They would contact us, Ofcom would contact us and say, we're speaking to you on behalf of this fracking person, this company, and we want you to do this and do that. And
that's crazy, Max.
Well, I mean, it's really, this is why in the UK you have people who like to circumvent the onerous laws in the UK by engaging in a lot of very fanciful speech and a lot of double entendre and double speak and things like this. Because they can't really be direct. You can't be a direct person. You can't speak directly in the UK. You have to always speak obliquely. So, I mean, you've lived there for a while now. You've had this experience when you're talking to someone, a British person, you feel like they're always avoiding the point. They're always somehow trying to get around and circumvent, and they're not very direct at all. They're always trying to insinuate something, and they use their eyebrow a lot. They'll just say, and right. And I was at a loss for many years trying to figure out why all the pantomime. Why can't you just speak directly? And then, I finally figured out it's the libel laws are so harsh there. People cannot speak directly. So they've developed this kind of British pantomime where they speak in innuendo and eyebrows and it's not because of everything they can't say. And it becomes a farcical after a while. And, the stereotypical vague, mumbling British person is for a reason. The libel laws do not allow direct speech.
Yeah, and that's what I find all frustrating about this entire exercise for me for the last 6 weeks is that we're being censored, and now it's affecting the way we behave without us even consciously knowing it, because we're thinking, okay, someone's going to sue us, someone's going to censor us, or someone's going to do something, shut down our business if we speak freely. And that's the worst type of censorship when you can't even freely speak your mind, and then you're not even conscious about it anymore. And it's really frustrating. And just to finish with Ofcom, I mean, we have a relationship with London Live, a television station here. I've been giving them my content for years, and they've been rebroadcasting it. And they got censored for one of the David Icke episodes. Funny enough, one that's actually still public on YouTube. But they got their knuckles rapped by that regulator. And by the way, Ofcom is also decides who gets the 5G licenses. So again, and like you said, they're doing the bidding of the fracking companies. How is that an independent agency? It's all just quite ridiculous when you look at it. And yet we all pretend that there's freedom of speech in this country, and there just isn't.
Right, and then you have, the BBC is an interesting case. Like 80% of the content, broadcast content, is through the BBC. The BBC has its own regulator. And there's a lot of issues as well with the BBC. One thing that's kind of interesting, and it's a subtle form of censorship. If you go to YouTube and you watch a Max Kaiser, Stacey Herbert, Kaiser Report video, it'll say on YouTube, this video, is RT, and RT is in part funded by Russian government. Okay, now if you click on a BBC video, it'll say, this is a BBC video, it's publicly funded. Publicly funded. Now, it's interesting because the way the BBC is funded and the way the RT is funded is exactly the same. They're both state funded. They're both funded by the state. One, in the BBC's case, they apply a special tax from the government called a TV license. That is, you must pay or go to prison. And then that money is used to create their state broadcasting content that's funded by the state. And in RT, they don't have a special tax just for TV. It's just taken out of the general purpose tax that they collect. But they're still government funded. It's not publicly funded. The BBC is not publicly funded like the public broadcasting system in America used to be, where they would call people up every year on a telethon and solicit donations from the public. That's what public funding is, right? That's not the BBC. The BBC is government funded, and I would say government controlled, because I've done many, many shows, BBC shows, and I can tell you that every word that comes out of there is government reviewed, government edited, government censored. The difference with the RT is that RT is government funded, but it's not government controlled. So that's the big difference between RT and the BBC. So YouTube should have a disclaimer at the bottom that says RT is government funded, but not government controlled. And under the BBC, it should say BBC is government funded and government controlled. That would be honest.
Yeah, that's a great point to make. And we've been hit by some very critical articles by the BBC, and it's clearly biased towards the government. They're also being threatened to have some of their funding removed. So I think they're getting in line even more by backing exactly what the government says and its policies. And just some of the journalism, I mean, it's just blatantly one-sided, biased by an institution that holds itself up to be this impartial representative of the news, and it's just not.
Well, I'll give you another, let's talk about this word impartial for a second. Now, I've been on BBC many times, and again, it's a unique experience, because before you are a guest on the BBC, you get called by a pre-producer, a pre-airing producer, maybe even two of them. They ask you what you're going to say, and then they respond to you by saying, you know what, your answer is not impartial enough. Try it again. So then you give them another answer, and they say, well, that's better, but it's still not impartial enough. Then you figure it out. You say, oh, okay, you mean if I just parrot the government line, I tell you what the government says, and then they'll say, oh, that's right, now you're being impartial. Thank you. Say that on TV. If you go on TV at that point and do not say exactly what you said you were going to say in the pre-interview, they will never ask you back. And so they use this word impartiality as a way to get around being direct. Again, it's not direct, right? No British person can be absolutely direct. They have to be completely circumnavigate everything and be oblique, right? So they don't say, you must say the government line to be on BBC. They say you must be more impartial, and they keep saying that until you parrot the government line.
What have you been watching, Max? I mean, when you see these last 8 weeks, what do you see in the world? What's the Kaiser lens on everything that's happening?
Well, it goes back to what we've been saying on Kaiser Report for 10 years and what Max and Stacey have been reporting about really for almost 17 years, that when you have an economy built on fiat money, that is to say unbacked money that's printed without any accountability, you end up with a lot of bad investments, misinvestments, bad behavior. It rewards bad behavior. It squeezes out good behavior and good investments. And this goes on year after year, decade after decade, and you end up with a failing economy, a failing currency. This is just the latest chapter. In the U.S., this is just the latest chapter in an economy that's been undergoing what you could call a controlled demolition now for more than 30 years. So this latest COVID-19 panic has been encouraging the central bank to print exponentially more of their fiat money, and they're making the situation much, much worse. And so that's what we've been covering. And so we've been kind of predicting this. In 2008, when they had the global financial crisis, the response at that point, they could have gone two ways. Barack Obama and his lieutenants like Larry Summers and others, they could have either bailed out the debtors, which was the historical precedent. Usually throughout history, when you have a crisis like that, you bail out the debtors. Or you could have done something highly unusual and unprecedented by bailing out the creditors. And they decided to bail out the creditors. They bailed out the banks who made the dodgy loans. They bailed out the banks who took the risk to making the dodgy loans, and they gave them a fresh injection of credit, and they expanded their remit. They expanded the amount of credit they could borrow. And so at the time, in 2008, we said definitively on the Kaiser Report that, okay, this is the absolute wrong way to go. And all they're doing is they're kicking the can down the road. They're deferring this crisis. It will come back bigger, 10 to 50 times bigger in 10 to 12 years. Okay, here we are 12 years later. Exactly what we predicted is happening. It's the part two of the 2008 global financial crisis. It's a total liquidity squeeze. It's a breakdown in credit all over the world. And it's encouraging these central banks to respond in, again, a similar way by simply printing exponentially more fiat money, which of course is going to make the situation that much worse.
Yeah, when I first saw, Trump talking about the 2 trillion and then the 6 trillion, and when I saw, them talk about the furlough program here, and they're cutting these billions and billions of pounds of checks to people. I mean, the first thing I see is a mess. But Max, the public says, oh, this is great. We're going to have money. Everything's going to be good. How do you explain to people that actually they're going to pay for it in the long run, and they're going to pay actually more than they're even getting?
Right. Well, the explanation, there's actually an economic term for it. It's called a Cantillon Effect by an economist named Cantillon. And he described quite eloquently what happens. The central banks print money, and it goes into the hands of the cantillionaires, the people who are friends of the central bank first, and then it trickles down to the hoi polloi, the man on the street, at some point at a later date. But by that time, the purchasing power of the money has been lost, and they are faced with loss of purchasing power as the money is being printed. Meanwhile, the people who are at the head of the line, the friends of the central bank, are using the money that they're printing, that they're given first. They're using it to buy assets like fine art, stocks and bonds in many cases, and things that have that go up in value. They appreciate in value. They buy expensive homes with it. And so their wealth is being concentrated more at the very top, and everyone else's wealth is their purchasing power is being destroyed at the bottom. And so this is how and why you see the impact of money printing on the economy. It creates an extraordinary concentration of wealth at the top, and it creates more poverty at the bottom. And there's one chart that you can look at that depicts this whole process brilliantly in one image, and that would be the money velocity chart. So the money velocity chart simply tracks the rate at which money is circulating through the economy. So if money printing worked to the way that they're telling us it should work, then the money velocity should hold firm or actually should go up. Because if you're adding money to stimulate the economy, you should see that money velocity, or the amount of times money is going from bank to bank to bank, from consumer to consumer to consumer. You should show some activity. But for the past 15 years, if you look at that money velocity chart, it's gone straight down. And in the last 6 months, it's taken another huge leap down. Money velocity is hovering just above zero. So that tells you that when they say they're going to print £1 trillion or £500 billion, that 99% of it goes into the pockets of a few folks at the very top, at the banking pyramid. And that's where it stays. It doesn't go anywhere. They just hoard it. They hoard the cash and they don't circulate it. They don't make loans. And in the UK, you have a huge scandal with RBS and other banks that were caught actually trying to profit at the expense of their customers by attacking companies that they've made loans to, with viable companies that had no problems. RBS was discovered to cut their credit off suddenly, hoping that they would go bankrupt so that they could buy assets for pennies on the dollar and sell them to one of their subsidiaries, one of their divisions. And so this has been a scandal now for at least 10 years for sure. But this is exactly what happens with this money. It feeds the kleptocrats. It feeds the worst players in the economy and who have great political power. So of course those kleptocrats want more money printed because they want the additional wealth that it gives them. And the poor classes, the middle classes, the lower classes, they think they want more money to be printed because they think it's going to help them, but it never does. And because the purchasing power is being destroyed. So, and they have no organized labor. They have no way to increase their wages. So it's just going to continue like this until you end up with what I call neo-feudalism, which is really going back to the Middle Ages. You'll have an extraordinary concentration of wealth in the monarchical class, the aristocrats, and everyone else are basically peasants or serfs. And they'll be, sheltering at home on social media, clicking ads for a protein pill, right? I call this the casino gulag, where you are living in a gulag, which is made possible by central banks and their money printing. And your only hope for survival is to click on enough ads during the course of a 24-hour period to win a protein pill to keep you alive for another day. So that's the casino. You just hope you can win that protein pill. So it's a casino gulag made in the neo-feudal model, engineered by central banks because they want to be monarchs, of course. Who wouldn't want to be a king? They just wanted to be a few kings and everyone else is a peasant. That's where we're heading in all this. This is what's happening.
Yeah, and for people who think this might be some strange fantasy, I mean, right now, the Fed is printing money and they're buying anything in sight, including corporate debt, right? So they're buying up, corporations, and basically the state is owning a lot of that debt. And if they continue, like you said, pretty soon it becomes feudal, where the state or this top level of people own everything. And now all of your dollar savings are worth nothing, and you're sheltered at home. And it's exactly what you're describing, right, Max?
Right. So the Federal Reserve now owns 1/3 of America's GDP by buying bonds, stocks, junk bonds, ETFs, and all this other stuff. So they're printing money for free, and then they buy the assets. So, on Wall Street, you would call this a leveraged buyout, right? So a leveraged buyout is you borrow against the assets of the company you want to acquire, then you acquire it, then you sell it all off, and then you end up owning those assets for virtually nothing. So here, the central bank is printing money for free and using it to buy all of these income-producing assets. They're going to buy all the property. They're going to buy all the utilities. They're going to buy all of the biggest corporations. In Japan, the central bank owns 100% of GDP worth of assets. They're already at 100%. So I think the U.S. will equal Japan in this sense. So if they bought $6 trillion worth of these assets over the past, they're up to $6 trillion now. So to get to 100%, they have another 16, 17 trillion dollars of purchases to go. And I fully expect that to happen. The debt in the U.S. Was at, I think, 24 trillion now. Expect that to go to 50 trillion. And the global GDP, debt to GDP, is close to 300% debt to GDP. So you're talking hundreds of trillions of dollars globally. And that's all managed by a few people in the central bank who manage everything like the Vatican would manage the Catholic Church going back into medieval times. This is the new papacy, and this is the new medieval model. We're heading back. You know, the whole idea of liberalism, of the Renaissance, of free markets and everything that we enjoy, that's a pretty new idea. It's only a couple hundred years old, really, 250 years old. And it was kind of a blip on the historical timeline. If you look at the broader picture of the last 2,000 years, we've been living more like slaves for 2,000 years than we have in the last couple of hundred years. And now I think we're going back to the way we were living before.
And the central bank and the Federal Reserve, they have these really cool sounding names, but it's really hard for most people to understand what they really are, right? There are these strange kind of like shell entities, and behind the scenes, most people don't really understand what's happening.
Well, it's a group of private bankers. And up until recently, central banks were not joined together. You know, different countries have had different central banks. So you see a lot of dynamic interplay between different countries would raise rates, other countries would lower rates. And it was kind of a holdover from the mercantilism from, you know, a couple hundred years ago, where there was more a strategic game going on with with sovereign countries. But starting in the 80s, they became all fused together into one global central bank. Nomi Prinz writes an excellent book on this called Collusion, and she was a former Goldman Sachs banker.
Yeah, we've had her on the show.
And she describes how all these banks are colluding now. So the global central banks, there's 6 or 7 the major ones. You know, they are now basically making a run at taking complete control of the global economy using the free money that they print. And you know, it's funny because they keep saying they're trying to fight deflation because, you know, the central bank sees deflation. They say, oh, you know, there's too much deflation. We need to print more money. But the joke is that the money printing causes the deflation. So, and they know this, but the mainstream media just repeats what they hear. The mainstream media will say the central bank is going to print more money to fight deflation. But in fact, we know now, there's no equivocation at this point, that this money printing is causing the deflation, which is what they want because it allows them to buy all these assets much cheaper, which is what they're doing. So now into the mix, of course, comes Bitcoin, you know, and I think that's the big, you know, savior for everyone going forward because of everything that it offers. But, you know, to finish up this point, I don't see any stop to the current trend of central banks printing trillions and buying up and taking private the public domain, taking private democracy, taking private everything.
It's a scary scenario. I want to get into Bitcoin for sure. Before we do, how bad is this recession going to be? And how are people going to feel it? And then finally, what can they do about it?
I think it's going to be a total transition. So we're leaving the period of globalization and we're moving toward localization. So even when Trump came into office, he said he's anti-globalist. He says I'm America first. So in globalism really ended at that period. So up until then, there was a 20-year, 25-year period of just-in-time delivery of manufacturing in China and sending to the U.S. and having your taxes paid in different countries at different rates, and everything was globalized. And then starting in 2016, that's now starting to come apart. And now in the U.S., for example, they realize they're going to have to manufacture a lot more domestically. They can't expose themselves to having their pharmaceuticals made in China or India. They have to do this domestically. And so the costs all the way around are going to be a lot more expensive to maintain a globalized economy in that way. So we're going to end up more for regionalism and localism. And as such, you're going to see the economy just change a lot. So I think there'll be a lot of entrepreneurialism, and there will be a lot of startups and entrepreneurial activity, but it'll be very different than anything we've seen in current times. And new markets will open up, but there'll be more locally based, domestic based types of businesses. And we could go back to a more mercantilist kind of global economy where countries are competing with each other in a way that we haven't seen in a long time. Under the globalized model, countries were not really competing so much with each other. You just had a few corporations that were gaming the system. It wasn't really a competition. But now we're going to see, I think, more competition, more mercantilism or neo-mercantilism. And this will also probably usher in at some point, Brian, I believe, that the only way to fix the global currency problem is they're going to have to bring back gold and back gold to these national currencies to some degree, either a 20% gold standard, a 40% gold standard, or higher, so that they have a way to bring back some meaningful accounting standards. Because right now there is no meaningful accounting standards. It's just fiat money versus fiat money. Nobody really knows anything anymore. It's lost in a fog. And so they're going to have to bring back gold. And then this will also change people's orientation toward business and finance and entrepreneurialism when you have an actual yardstick to use to build your business and to build your country's wealth, the wealth of your country. So I think those are changes. So it's not. I don't think it's necessarily going to be where you go into depression part 2, and you just have this dead economy for many years that you're just waiting for something to pull you out of it, like a war or something like that. I don't think that's the case. I think it's going to transform pretty dynamically, pretty quickly into something completely different. I think a year from now, 2 years from now, we're going to look back at the economy pre-COVID-19 virus as being something very much in the past that doesn't exist anymore. And we're entering into a completely different economic model. And there's going to be a lot of winners and a lot of losers. You know, a lot of people won't adapt. They won't like this change, or they won't follow, and they won't carry through to the next era. A lot of people will, you know, particularly a young generation, the millennials and the Gen Z. They'll be like, you know, I was really shut out from the boomers' wealth. You know, they took all the wealth, and there's left very little for millennials and Gen Z. We gave the millennials and Gen Z all of our debt. You know, they have all the student debt, they have all the national debt. You know, they got all the debt. The boomers have all the money, and now the wheel has turned. I think the boomers are now going to start to fade away, and they're going to start to go bankrupt. But these millennials and Gen Z, I think now they have a chance to rebuild the global economy more as they want to. So I'll be interested to see myself how they do it.
Yeah, it's a fascinating new world order. Do certain industries, are they just going to disappear? You know, airline travel, retail, commercial real estate. What do you see happening in these spaces?
The short answer would be yes. Right. So all those things you just mentioned seem like they got big problems. The retail space was already losing to Amazon, right? So retail was already getting crushed by Amazon. And so now that trend is only being exacerbated. So Amazon is going to get, 3 or 4 times bigger. And retail, as we know it, is really going to change and probably disappear. The airline industry is probably going to become more like a utility industry. So it'll be more like state airlines that are run by the state just as a service provided by the state. There won't be private airlines as such, because the airline industry has always been a boom and bust industry, and it's always been extremely hard to make money in the airline industry. Warren Buffett himself invested in the 1989 in US Air, lost a lot of money, and vowed never to touch another airline again, only to re-enter the airline market, buying into airline stocks a few years ago, taking huge positions, and then just getting wiped out again, lost $50 billion. In the last quarter at Berkshire Hathaway, got destroyed by the airline industry again. It's uninvestable, the airline industry. Richard Branson, it looks like Virgin Air is in big trouble. He's got to the end of May to find some financing, as I understand it. It doesn't look good. And some other airlines have declared bankruptcy. So the airline industry is going to have to be run more like a utility, and the cost is going to be a lot more expensive. And the idea of getting on a $20 to get to the south of Spain for a holiday, I think those days might be over. So that's the story there. Other industries, restaurant industry, anything like, we'll see how this new generation deals with this, because they're going to have to come up with some highly creative solutions. The winners, obviously, so far, you've got Zoom is a huge winner. Teleconferencing, you've got a company like DocuSign, because everyone's not meeting in public anymore, and they're doing virtual meetings. They're doing public signing. They're doing signing online through DocuSign, which is a way to trade legal signatures online. That stock is doing well because this kind of fits into this new paradigm. Commercial real estate looks really bad, especially if you have companies like Twitter saying, Jack Dorsey announcing recently that he would extend the policy if people can work from home indefinitely. So that puts the whole industry on alert. Like, does this mean that everyone going forward will have the option of working at home? So that means the whole idea of the office gets disassembled, and commercial real estate, office real estate markets look like that's terrible going forward. There's a big trend for people to move out of cities. So you'll see some depopulation going on there. And that, of course, affects the restaurants and everything, the social, the theater, the New York theater, all these things are going to be impacted severely. One of the big winners would be virtual reality. So you see a lot more conferences heading into virtual reality. You've seen 2 or 3 now, where you strap on the goggles and you're in the virtual reality space. And people are now getting acclimated to that as being the new normal, so that you don't need commercial real estate for that. The whole idea of property, in the UK, people love property. They love real estate. It's such a national obsession. And it's done well for 20 years. When I was living in London, I know so many people, they haven't worked in 20 years because the value of the flat in Soho or Shoreditch, is going up 15 to 20,000 pounds every year, and they could just and your bank account was tied to that, and you could just became an automatic teller machine, and that was going on for 20 years. The property markets in London, as you know, have been going up sharply for 20 years, and that bred a whole generation of folks that just lived on this kind of property appreciation, didn't really do anything else for gainful employment. But now looks like that's going to go in reverse. Plus, it's deglobalization, so you're going to see less Saudi and Russian and Chinese billionaires buying up these expensive homes in London because there's a lot more tensions now geopolitically between these countries. So you don't have that money flooding in at the high end. And so these are some of the changes. But I definitely think if you go through every industry group, it's going to be a profound change in every single industry group and in some way.
Yeah, it's so strange that all these things we assumed to be normal ever since you're a kid, that now it's a new normal, and like you said, everyone thought, oh yeah, $20, I get to the southern coast of Spain. You go to work someplace, right? Public transport. I want to live in a city. I want to go shopping. Like, that's all completely been turned on its head. So it'll be interesting to see. And I agree. I think the innovators are going to be the winners here. And the younger generation, while the older generation probably locks themselves down. What about, I want to talk about crypto, definitely. What about the COVID-19?
To continue watching the rest of the episode for free, visit our website, londonreal.tv, or click the link in the description below.